day and welcome to the latest episode of the Fertilizers Matters podcast. My name is Huijun Yao and I'm the editor for Fertilizers in Asia, based in Singapore. Today, we are happy to invite our market reporter for Asian phosphates and NPKs, Xuan, who is also based in Singapore, to speak to us about the changing trade flows in Southeast Asia's phosphates markets. Welcome to the show, Xuan.
Thanks very much, Huijun. Happy to be here.
Now, Xuan, we know that Southeast Asia traditionally relies heavily on China for its phosphate supply, particularly for DAP and to a smaller extent, MAP and TSP. Could you please tell us more about that?
Yes, of course. China is indeed a key supplier of DAP and MAP to Southeast Asia due to its regional proximity. China historically accounted for around 60% of Southeast Asia's MAP and DAP imports, mainly for Thailand, Vietnam, Indonesia, Malaysia, and the Philippines. Thailand imports 450,000 tons to 600,000 tons of DAP each year, depending on demand. They use it as a raw material for bulk blend NPK production, which is the more preferred type of NPK fertilizer used by growers in the country, and only a small volume of it is used in direct application. Vietnam also imports 600,000 tons to 700,000 tons of DAP each year, despite having its own DAP production, making it a net importer to sustain its demand for DAP fertilizers in the domestic market, which is also used as a straight fertilizer on in blends. China accounts for roughly three-quarters of Vietnam's total DAP imports.
And what about Malaysia and Indonesia? What can you tell us about their phosphate imports and dependency on China as a key supplier?
Both Malaysia and Indonesia buy some powder 1050 MAP, mainly sourced from China, for compacted NPK production. Malaysia imports up to 90,000 tons of NAP in a year, with China accounting around 85% of all imports. Indonesia is a small MAP market in the region, importing up to around 60,000 tons per year, also mainly relying on China for supply. And Indonesia is the main market for Chinese TSP in the region, which is used for direct application by oil palm plantations, with Chinese supply accounting more than 90% of its total TSP requirements in 2025. Indonesia's state-owned fertilizer company, Pupuk Indonesia, is the largest importer of DAP in the country, again relying mainly on China for supply to its NPK subsidiaries. Indonesia imports 300,000 tons to 350,000 tons of DAP in a normal year, with China as one of its main suppliers.
I see. So indeed, Southeast Asian markets do offtake significant volumes of DAP and other phosphate fertilizers from China. But in the recent years, we know that Chinese phosphate suppliers have had limited export availability for phosphates, especially that for DAP and MAP. This is apparently during the fourth quarter and first quarter of each year as they prioritize supply to their domestic market to meet the needs of the farmers for the main application season. So with China's export availability of DAP reducing year to year, how do the Southeast Asian buyers cope with this change?
So, with China's DAP export availability decreasing over the years, we have seen Southeast Asian buyers pivot to buying other origins. Vietnam is obviously the key choice since they are within the region and could ship via containers or small bulk vessels to regional buyers, which is what the buyers here prefer. However, Vietnam's phosphate supply is mostly captive within the domestic market, and volumes available for exports are not significant enough to offset the loss of Chinese product. So, in the recent years, we have seen other origins such as Morocco, Saudi Arabia, and Russia increasing their supplies to Southeast Asia. Regional importers have particularly increased their imports from Russia to reach 260,000 tons of DAP in 2025. That's more than double in volume in 2024, but still around 130,000 tons below that of the historical high achieved in 2022. Morocco's OCP has also started moving more DAP into the region since 2024, with arrivals growing from around 47,000 tons in 2024 to nearly double of that in 2025. Saudi Arabia's Ma'aden has also ramped up their DAP exports to the region, mainly into Thailand, over the last 4 years, with shipments to Thailand reaching 112,000 tons in 2024.
That's very interesting. So for this year, could you tell us how have the trade flows for DAP evolved in Southeast Asia?
This year, we have seen buyers diversify their supply origins more readily and stepped in for non-Chinese volumes earlier than before to secure sufficient stocks for this season. This is mainly because Chinese suppliers have suspended their exports since mid-October 2025 and signaled that they would not resume exports until at least August this year. That has encouraged Southeast Asian importers to plan ahead instead of waiting for Chinese suppliers to return in April or May, which was what took place in the last 2 years. In the first quarter of this year, we have already seen importers receive nearly 90,000 tons of deliveries from Russia, 60,000 tons from Vietnam, and 34,000 tons from Morocco. More cargoes from Morocco, Saudi Arabia, and Russia are expected to arrive in May and June in the absence of Chinese product.
That's interesting to know. We know that in the last few years, in the absence of Chinese supply during the first quarter of the year, Southeast Asian importers were hesitant to book cargoes of other origins as they expected Chinese suppliers to return to the export market from the second quarter onwards, which led to panic buying in some markets that pushed up prices sharply. This year, the Middle East conflict has thrown in a lot of uncertainty to the phosphates market. What impact has the ongoing Strait of Hormuz disruption had on DAP availability across Southeast Asia?
So, the ongoing Strait of Hormuz disruption has affected DAP availability in a few ways. The first is on raw material supply. The Strait of Hormuz is an important waterway for global sulfur exports, which is also a key raw material in DAP production. In 2025, about 19.5 million tons of seaborne sulfur exports, or just under half of all global sulfur exports, transit through the Strait of Hormuz. So, any disruption there has effectively tightened raw material availability and pushed up both sulfur prices and overall production costs globally. Second, the Middle East itself is a major producer of finished DAP. Saudi Arabia is one of the world's largest DAP producer, and Saudi Arabian exports usually transit through the Strait of Hormuz. With the disruption, cargo flows have been impacted not just into Southeast Asia, but globally. At the onset of the conflict, we estimated that around 70,000 tons to 75,000 tons of DAP bound for Southeast Asia were effectively stranded in the strait. This has contributed to a tighter supply and supported higher prices. Thirdly, we have also seen freight costs increase. The conflict has driven up oil prices, which in turn raised bunker fuel costs and freight rates. These higher logistics costs are being passed through into delivered DAP prices. To put some numbers around that, DAP prices into Southeast Asia were around $730 to $750 per ton CFR in late February, just before the conflict. By end March, they had risen to $830 to $850 per ton, and as of mid-May, they are at $920 to $950 per ton CFR based on our 14 May assessment. So that's an increase of close to $200 per ton since the conflict began.
Great analysis, Huijun. Now, as most of the markets in Southeast Asia are approaching the start of their respective main application seasons, what can you tell us about the expectations of domestic demand and fertilizer sales this year? What are the key drivers that we should pay attention to?
As markets across Southeast Asia moved into their main application seasons, one of the key concerns right now is fertilizer affordability. Crop prices, such as those of rice, have been trending lower through most of 2025 and into 2026. Lower crop prices reduce farmers' purchasing power, and that becomes especially challenging when fertilizer prices are rising at the same time. So, the combination of weaker crop economics and higher input costs is likely to constrain demand. We are already seeing this reflected in market behavior. Importers are hesitant to commit to fresh cargoes at current elevated price levels. So, overall activity remains relatively subdued. This makes affordability one of the key variables to watch out for this season. The second major factor is weather. Current forecasts point to El Niño conditions developing across much of Southeast Asia by mid-2026, with countries like Thailand and the Philippines preparing for the possibility of a moderate to strong event. Fertilizer application and offtake in the region are highly dependent on rainfall patterns. The projected hotter and drier conditions, along with below average rainfall and in some cases even drought, could curb fertilizer demand and limit further imports to the region.
That's very insightful. Thank you for sharing with us your view on the market today, Huijun. And with that, we have come to the end of today's episode. The Argus Fertilizers team puts out bi-weekly podcast episodes that discuss the current hottest topics in the global fertilizer market. So do keep a lookout for our next episode. For more pricing, analysis, and market coverage across the fertilizer markets, please visit our website. Thank you for listening, and we'll see you next time. Goodbye.